Good morning, everybody. Mike Vacchi, Princetontrader.com, here for ntmarkets.com with your Friday morning pre-market webcast. Okay, S&P 500 E-mini futures daily chart, and what you're seeing here is the bulls do what the bulls have done so many times, which is, grab a low, turn a bounce into a rally, and then get a short squeeze going, and get some economic news to back it up. They're taking the tape back. So caught some people short, caught me short. I have been playing the sell rallies card, and so I'm going to end up taking a hit this morning. But, that's all part of trading. I mean, if anybody ever comes on one of these things and says they get them all right, I mean, run far away. I mean, just run, because these things are going to happen. And what you do as a trader is you control your size, and you control your risk, and you live to trade another day. So I would imagine there are a lot of people in that short boat. And you see a lot of them covering now. What we're viewing here is you've got the weekly pivot down at 2097.20. You've got the middle band down in the 95.89 currently. That 95 to 97 area needs to hold all day for the bulls, without question. Must hold all day. They must close above it. If they can do that, then you can see them going ahead and making a run back up to the 21.1975 to go ahead and make those new highs. We're running and bumping back up into the 2106 area again. You've got R2 off of the daily pivot up at 2108. That's an area that the bears are going to try to defend. They've already defended it once. They're going to try to defend it again, actually right now. If they can hold that as resistance for the balance of the day, then Sunday into Monday may be a little bit more two-sided. A full-blown reversal here is pretty unlikely. I mean, to the downside. You'll have folks that are mentioning that, but that's a very low probability outcome. And those wanting that are probably those who are much, much shorter than I am, from much farther down below than I am. This was an interesting move by the bulls. They made the lower low yesterday. They did what they needed to do to engage those tight bands. They had them bending to the downside, but they just couldn't hold it. And you saw yesterday the inability of the bears to get any traction. And I think a lot of that had to do with today, with the fact that we were going to get the jobs report. Nobody knows what the reaction is going to be. But what you can say in looking at the numbers and the reaction now is, with all the calendar language out of the Fed statement, with things being focused on the condition of the economy relative to whether or not they're going to raise rates and when they're going to raise rates, that this morning was a bad news is good news type of a deal. The revisions got cut. They came in less than expected. So, put that in your pocket for next time around. Everybody's learning in a new environment here since they changed the statement. We've gone from a time-based thing to an economics-based thing. So it's kind of getting back to how it was, before they came up with these time frames. So just remember, 2108 on the upside, 95 to 97 on the downside. I'm thinking it's going to be an active regular session. But it may do what it did yesterday, which is go to where it wants to be and then just kind of bore everybody all day. And if it does that, don't get all chopped up on a Friday. All right, everybody have a fantastic day. Have a fantastic weekend. Follow us on Twitter at Princeton Trader. Check out the website. Come check out the chat room. We have good days. Sometimes, every once in a while we have a bad day and we don't run from it. We own it, and from what I've heard from our subscribers, that's fairly refreshing. So come on in and check it out. We would love to meet you and see if we can help you with your trading. Everybody have a fantastic weekend. I'm back Monday morning with another webcast. Trade them well, everybody.